Welcome back to my market review series. And so now I'm going to go through the British pound against the Canadian dollar. So right off the bat, I want to explain whatever is on my charts instead of actually taking time to um, analyze from scratch. So this right here, this blue horizontal line is the previous month's high. This is the previous month's low, and the blue dotted line right here, which coincides with the current prices previous month mid-range. So I hope you've got that. Then down here, okay, not down here, but and as you can see, this candle right here is the previous month. So on May, low, high, and mid-range. So zooming into the weekly. So to the weekly, I also like to highlight those levels, those particular levels. These levels help me in top-down analysis to have higher time frame bias and also lower time frame confluences. So for the weekly, I have this white horizontal ray as a high, this one as the low range low, and this dotted yellow line as the mid range. So we're going to zoom into the daily. So I normally start by doing that. Then zooming into the dailies where I look for my points of interest, where levels and zones where I'm interested in taking a trade. So ignore all this technical analysis to the left. However, um, keep in mind the blue levels are the monthly, the horizontal ones right here, and the white ones are the weekly. So um, so from here, we actually see that the price has been trending up since February of 2023. That's why I placed this parallel rising channel. Then zooming down to, okay, before we zoom down, my areas of value are, so initially there is this is a daily order block, and the candle responsible for that is this, which was the origin for this particular move right there. Then the other area of value for me is this gray zone right here. I'm going to highlight it. So this particular gray zone, and I'll show you why just right now. So this particular gray zone is an area of value for me because it's an inefficiency gap that comes right below this order block. So as you can see, right here we have a daily order block, which was the origin of this well-sustained move to the downside. Then back to my point of interest, which is this gray zone right here. As you can see, there's an inefficiency right here, which is below my daily order block. So that efficiency for me right now works as a target. So my bias generally, so far, as you can see, is that the price will continue to go higher until, so my first target where I expect price to develop reversal price action is this zone. So if we have bearish price action right here, I close my trade and start looking for shorts that will break us out of this rising parallel channel. However, we might see a breakthrough of this zone and a continuation up to the extreme end of the channel. However, channels to me are just guidelines. The important zones are the horizontal levels for me. So onto so before we go ahead, um, let me highlight this as the previous week's high. This is the previous week's low, and this is the previous week's mid-range. So being that my bias is that the price will go higher, I would want to first price first retrace for liquidity before we see a move higher. and I want to see the liquidity um, taken from within this range. So I don't want this range to be broken to the downside before going higher. And this is what I mean. So today is on a Monday, and looking here, you see there is this zone that I've highlighted right here. And this zone right here is because of this particular candle, which this final sell candle before this aggressive move to the upside. So that qualifies to me as an origin or a daily order block. So within this particular weekly range that I have highlighted, I would like to see price retrace, test for liquidity right here, then have an aggressive move to the upside. That is what I anticipate for price to do. Then onto the monthly range. Just a second, let me clear this. So those are some of the metrics I look for in continuation trades. Then before we get to that, there is an entry I missed right here. So I'll go ahead and delete this previous analysis. So yeah. So I had identified this rising channel a while ago, I'd say, and I'd marked out this region. So I had been waiting for price to reach this region, bounce off, give me my desired price action right here, and get into a long. However, as you can see, let's zoom into the lower time frames, that is the 4-hourly. So as a matter of fact, this was the position tool I was using. Let me try and make it a bit more visible. So as you can see, this right here is the price, is the position tool that I was using. So here was my logic for the trade. I expected the price to break this high right here. So visit my point of interest, bounce off, break this level right here, then retest the origin of this move. However, price did not give me this move back because I had my limit orders at this level. So I was waiting for price to retest, then we have a blast off. However, I did not get that opportunity. My best is still to the top of the rising channel, and I'm inclined to believe, according to my analysis, that we're going to reach this zone right here. But for me to enter the trade, to even consider entering the trade, I'd want to see this retracement of price right here, and my particular price action that qualifies as an entry trigger for a long. So this is how potentially my position will look on entry. So price should retrace, and I should get at least a 3.6R trade from this. So that is my plan for the week. If I don't get that particular price action, I'll be out of the market until further notice. However, I'm going to make an update if and when we are triggered into the market. Make sure to watch the rest of my series. I have previous videos on such a pair and the rest of my trading plans.